When you're trading emerging market currencies, it's common, of course, to pair them with the dollar or the euro. And John Hardy is focusing on the Mexican peso and the Polish zloty, but you could pair both of these trades against the euro. And how about this? The Chinese offshore yuan.
There are different ways to trade these. You can trade both of them versus the euro. If we think that risk appetite is going to come back and ECB is going to launch QE2 more aggressively, then the Fed is going to continue to press the pause button. But you could also look at something more exotic and look at to trade them long versus something like the Chinese offshore yuan. And the reason for that is simply that Chinese has changed its exchange rate regime. It's devalued. It's looking to move towards a more managed float versus the dollar. And it hasn't done this to keep the level unchanged. It's done this because market pressures are pointing towards a lower exchange rate for the yuan, and I think it will continue to weaken. Now the risk is that they want to take this very, very slowly, so this could be a bit of a frustrating trade, but I do think it's headed weaker no matter what. It's a question of the time and the pace of the weakening. So on that account, if we're going to be long, and we expect it to move at least down versus the dollar, long emerging markets versus a short Chinese currency could be one compelling way to look for sort of adding some octane, if you will, to the trade and incorporating a new theme into these trades.
There's more from John throughout our Essential Trades publication on tradingfloor.com. And follow our strategists with the hashtag SaxoStrats on Twitter and also on Periscope, where the Saxo team give their tradable views at 9:05 Central European Time every morning.